EV stocks have been posting great returns in 2020, Tesla and NIO stock to be more specific. Stock investors have been willing to pay a premium for high-growth EV stocks while ignoring more traditional automakers. Why is that? And would NIO and Tesla become the bellwether stocks for the EV industry? That is what we will be discussing today in this video. Folks, please don't forget to subscribe and hit that like button. Now, let's get into it. Investors the world over have realized that the global pandemic has accelerated the pace of technological change the world over, and electric vehicles will be one of this century's greatest technological shifts. More importantly, investors are betting that pure-play EV makers such as Tesla and NIO will win the race of this massive transition from gasoline-powered cars to electric vehicles. Investors are betting that traditional automakers will be left in the dust. At least that seems to be the consensus if you look at the stock prices of traditional auto manufacturers such as GM, Ford, and Volkswagen. On the other hand, EV stocks the world over are doing phenomenally well. Stock investors of all types, be it institutions or retail investors, are extremely bullish on the prospects of EV stocks. But as an investor, you need to be very careful about the long-term viability of any stock that you might buy. An investor should definitely have a basket of emerging technology stocks in their portfolio, while at the same time be aware that winners in the tech sectors tend to dominate their respective markets. The secret to earning a great return on your stock investment is to pick the winner in their respective industries. So Tesla or NIO stock? First, let's analyze Tesla. Tesla is by far the global market leader when it comes to EVs. No other company can match Tesla's product lineup when it comes to EVs. Its battery technology, self-driving software, and price competitiveness gives it a first-mover advantage in this fledgling industry. As an investor, you need to be aware that Tesla stock is up by a factor of 10 over the past 2 years. The company's market capitalization will all the way down to $40 billion in May 2019 and currently hovers around $400 billion. Gravity-defying stock has astonished most analysts and investors as they try to grapple with the stock valuation. But as Tesla bulls will tell you, this company and especially the stock has a long way to go. Tesla is ramping up its production capacity at a massive scale, hoping to reach a capacity of 2 million vehicles by 2022. It has a solid product lineup with potential blockbusters on the way, namely the Cybertruck. Additionally, it is investing heavily in its battery technology, potentially widening the gap that it already enjoys against other automakers. Most importantly, Tesla still has massive revenue streams that have yet to come in, namely the robotaxi service and its energy business. A lot of forward-thinking analysts expect the energy business to become as big as the vehicle business. The autonomous taxi service could also generate massive amounts of high-margin revenues for the company. To sum it all up for Tesla, it seems that the company is just getting started with its domination of multiple industries on a global scale. No other company has the same growth potential such as Tesla. The stock is a solid investment. Now, let's analyze the prospects for NIO. The Chinese automobile market is already the world's largest and is still growing. Recently, the government has taken the initiative to ensure that EVs make up at least 25% of the overall vehicle market in China. Given that the government in China takes a top-down approach to the economy, it is quite plausible that the 25% target will be met. The central authorities in China are quite adamant when it comes to achieving their economic goals. What does that mean for NIO? Well, the company is already the local market leader when it comes to EVs, second only to Tesla. It has captured the premium segment of the EV market in China compared to other local manufacturers. Recently, a government fund also invested quite a lot of money in the company with the clear expectation that it expects NIO to become one of the leading local EV manufacturers. The company just recently announced a record-breaking quarter, and the company's CEO just announced that they plan on tripling their manufacturing capacity by the end of 2021. It clearly means that the company expects sales to go up exponentially. The most telling sign of NIO's bright future is the government support it has received. Usually the government supports a small number of local champions in any given sector, and expects those chosen companies to dominate the market, similar to how Huawei dominates the telco equipment industry and Alibaba the local e-commerce market. Although these are private sector companies, the implicit and explicit government support has a lot to do with the success in their respective markets. There seems to be every indication that NIO will fulfill its expected role to be a local EV champion. Investors clearly agree because the stock has gone up by a factor of 10 in the past few months. Now let's compare the two companies. Both stocks are trading at a price to sales multiple of more than 10x. Clearly investors are willing to pay a premium for high growth stocks. But as we explained earlier in this video, these are two very different companies in different phases of their growth. Although they are both playing in the electric vehicle industry, they are not direct competitors. Tesla is trying to dominate the global EV market, while NIO is planning on dominating the premium EV market in China. NIO is where Tesla was 5 years ago, just starting to ramp up with a clear focus on the Chinese market. Think Tesla before Model 3. But given that the Chinese government has already tacitly given the indication that it wants NIO to be a local champion, the company's probability of success is very high. Our analysis tells us that both of these companies have a bright future. Tesla will become the global leader in the EV market, while NIO will become a local champion in the Chinese EV market. Therefore, our recommendation is to buy both of these stocks, probably with more capital allocated to Tesla. We will be releasing more videos on both these stocks. Stay tuned and please subscribe.